What is up, YouTube Nation? It's your boy Britt VR. Welcome to the show. Let's get into some details about the cryptocurrency market. Especially, we're seeing the market fall and it's trying to rebound back up to all-time high. It's going to be very difficult because there are a lot of barriers above to get back to that $60,000. Now, is it a time for you to sell and buy back Bitcoin cheaper, or is it a time to just hold your Bitcoin and go throughout the whole entire bear market? We're going to go over some news to help you make your decision. So hit the like button and hit the subscriber button. So billionaire Ray, he said he has some Bitcoin. So let's listen to what he had to say.
Yeah, I think Bitcoin's greatest risk is its success. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin, and they want to do that in a bigger way, like buying gold or something in a bigger way, and then there's more transaction. They lose control over that, and that's an existential risk. So yes, that's connected. The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond.
So that's pretty interesting. It's talking about the bond market. That's where the Fed sell US dollars, basically. And if people don't want the US dollars and they want Bitcoin, that would be a huge problem to the government. And we see a lot of rules being handed out. So that is very important to listen to that. Next up, we had the billionaire who was always bearish on buying Bitcoin, talking about now he wants to put 1.5 billion into digital currencies after the prices drop. You see what's going on right now? They had a chance to buy into cryptocurrency the last bear market, but they didn't. And this boom just came up and they see all the people make all that money. Now they want to put their hard-earned money into the cryptocurrency markets because there is way more profits. So Iran wants to ban Bitcoin again. Now they're banning Bitcoin mining, echoing China after a blackout. Iran they always have big problems, guys. Their infrastructure sucks because they're under sanctions, and I don't think too many people in Iran is mining Bitcoin. They want to make sure they keep their people down and to only use their currency. And they don't want their people to really use Bitcoin as a foundation of wealth in their country. Now, we know Iran is mining cryptocurrency as a government, and they don't want their people to mine it, but they want to mine it themselves. So that is a huge problem within itself. And the reason they're mining Bitcoin, the government, is to hide behind the sanctions. So they don't want their people to hide behind to get around their fiat because it's being manipulated so bad, so much printing. But they can mine the Bitcoin and hold the wealth and get around the sanctions. Crazy thought. All right, guys. So this is Bitcoin. Whew, it's not looking too good, guys. Not looking too good. Right now, we're still under this 200 moving average. There's like 33 minutes left. 33 minutes left for this candle right here. And we just been tapping up at this $42,000 resistance. If we pop up, we'll go to 44,700. But I'm thinking we're going to continue to go sideways and see what's going to happen. So this is the classic Wall Street cheat sheet, and this right here, guys. So this is the area where we couldn't get past that 50-day moving average. We pushed down, and now we push back up off this dead cat bounce. This is what I think it. So we're pushing back up, denial. I think this is the area we're getting into, and we're gonna be in the panic area very soon as this pushes back down. This is just my perspective. I could be wrong. I'm not a financial advisor, but if you look exactly at what you're seeing right here, this is the exact play. And this is the exact play that happened in 2017, 2018. Bitcoin Sessions had a tweet going out talking about Bitcoin Lightning, and crazy Elon Musk sent the response saying Lightning is needed. You see that Lightning is needed because Singularity is not enough energy to send out millions of transactions. So the cryptocurrency, the Bitcoin community has been waiting on Lightning to take off. I have a Lightning node, and I have been earning passive income with my Lightning node, but I am ready for it to take off. I want every single wallet to be hooked up to the Lightning network, and we wouldn't have any problems about transaction fees. But the thing is, you have to get people mindset to use it and teach people how to use the Lightning network, and have all the merchants only have, well, no, you can have both ways, but you gotta let the merchants be able to give access to their customers with the Lightning network. And we'll see the future on this, but this is very, very important for Bitcoin security, because we don't want to change the security of the mining, but we just want to make sure Bitcoin is just fast and can compete with like Visa or MasterCard. That's the whole plan, as Satoshi wanted. So this is evidence to me that the markets are going further down. The Ethereum network is not as congested as it was. There's not a lot of people on there using the products as it was before. Not a lot of traders on the DEXs, and not a lot of people sending tokens. So this is another indication to me that the market is going further down. All right, Tom Lee has news. He said have to be aware that Bitcoin will remain hyper volatile. So let's listen to this.
Maybe I should call you Laser Eyes, Tom Lee. You still got those in your Twitter profile. So tell us, has your long-term thesis on cryptocurrencies, has that changed over the last few weeks? Where are you?
It hasn't. I mean, Bitcoin volatility is sort of systematic to the network itself. So I think anybody who buys Bitcoin has to be aware it's always going to be hyper volatile. That's the opportunity, and that's why people call it diamond hands. I think the real to investors to crypto, especially coming through the Robinhood platform, et cetera, may not have been attracted to the technology or to the sound money arguments. And that's why this is essentially a bit of a wake-up call for those, because I think when you look at where the selling's taken place, it's not from original holders of Bitcoin, but it's a lot of new accounts.
Mm-hmm. Are you referring to the institutions then? And we heard this from another guest last week, that they're not really true believers. They were looking to partake in sort of this momentum, but they aren't necessarily believers in the back-end technology. Is that what you're referring to, Tom?
Yeah, and institution casts a really wide net, because there's family offices and there's hedge funds and CTAs and there's machines, especially now that there's liquid futures. I think a lot of institutional money does trade momentum. They've got stops, and they also arbitrage liquidity. So I think if I was a machine, what I would have taken advantage of is the amount of leverage there was in the retail accounts, and the amount of either volatility you need to create or downside pressure to actually create liquidation. So, I mean, I think machines were playing it on the short side, on the institutional side. A lot of them covered, and I think that's why crypto is levitating this week.
Tom, how do you think cryptos, and I'm lumping Bitcoin in there. I know that there's a lot of diversity within crypto. How do you think cryptos perform in a down market? And you know the kind I'm talking about, when there's not a lot of day trading going on, individuals are out of the game, stocks are unpopular, people turn to things like real estate. I mean, does all of crypto get liquidated under a scenario like that and revalued? What should people prepare for?
John, absolutely. On a risk-off market, just like March 2020, crypto doesn't survive that, because liquidity is being withdrawn and people need to raise cash, and they might have margin calls in their fiat side. But that doesn't make crypto unattractive. It's the same reason people say stocks never underperform bonds over a 20-year period. You have to wait 20 years for stocks to beat bonds. in crypto and Bitcoin, you never really had to own Bitcoin more than 24 months to actually never lose money. So I think Bitcoin is hyper volatile. That's the nature of it, but that's what creates the reward for people. And again, even though Bitcoin is in the penalty box now, I still think it can exit the year over 100,000.
And lastly, guys, the Fed, they're continuously developing their cryptocurrency. Let's listen to Fed Powell talk about this really quick.
Hey, Tyler, the Federal Reserve announcing it's taking another step at looking at the possibility of issuing a central bank digital currency, saying it's going to issue a paper. And that paper will be issued this summer that will focus on the benefits and risks of a central bank digital currency. The Fed's going to ask for public comment on whether or if it should do this thing and what the risks are. And Chair Powell saying in a video release that the Fed made available along with this statement that this represents the beginning of a thoughtful and deliberative process when it comes to thinking about a central bank digital currency. He does not say, for the record, the Fed has reached a conclusion to issue one. But here's some quick sound from what the chairman released in his video.
We are committed at the Federal Reserve to hearing a wide range of voices on this important issue before making any decision on whether and how to move forward with a U.S. CBDC, taking account of the broader risks and opportunities it could offer.
He also says the CBDC should be designed for general public use and should be a complement, not a replacement for cash. So, Kelly, hard to know exactly how big of a step this is. The Fed has been thinking about issuing a CBDC for quite some time, but now it's going to issue this paper, and that paper will be coming out in the summer.
Steve, it's interesting to look at what's happening in China with some of the experiments they've been running with digital currency. It might make it harder for our Fed because obviously China can do more tracking of citizens' use of the currency. They can use monetary tools that our Fed might want to pursue, like putting an expiration date, for instance, on currency when they're trying to stimulate the economy. But it does seem like they'll have to face down concerns on a number of different fronts and maybe clearly delineate what a digital currency can and can't do.
You've got that absolutely right. There are major privacy concerns that come with this kind of currency. And by the way, the Federal Reserve has this thing called Congress that it ostensibly works for that would have to approve of such a thing. Unclear what the public temperature is for this sort of thing. So we're kind of trying to look. The way I describe this, Kelly, is the Fed is the main train that takes you from your suburbs to your city. All of a sudden, over time, these other trains the tracks have been laid down on the side. So there's this Bitcoin train, this other train that are kind of promising sort of to do the same thing. And the Fed's trying to figure out how much of a threat and how much of this new technology it needs to be on board with. And it's kind of inching its way, trying to slow walk this thing. But the technology is moving faster, I think, than the Fed is ready for.
In terms of our competition with other countries for being a dominant player in cryptocurrency, where do we fit? Are we behind the Chinese? Are we behind others but ahead of some? What?
I understand the Bank of England is doing a similar study as this. I think we're behind China. And one of the things that Powell makes a point of is that we will be part. I want to find this exact comment here. It came towards the end of the speech where he said, we're going to make sure we keep pace internationally with what's going on with standards. I'll read you this. Irrespective of the conclusion we ultimately reach, we expect, as in the Fed, to play a leading role in developing international standards for CBDCs, engaging actively with central banks and other jurisdictions, as well as regulators and supervisors. So they don't want to be left behind. And yes, I think, Tyler, it's fair to say we're somewhat behind some of the other countries out there.
So thank you guys for watching. Hit the like button, hit the subscriber button, and all you guys have a good day, and all you guys have a good night, and enjoy the crypto life. Peace.